the show. Manish, great having you. Thanks so much for joining in. I mean, this flare up that has happened overnight, it's the last thing we needed, right? Because the markets were kind of getting used to a new normal for crude. Maybe earnings will show a good space. And then you have this impediment, speed breaker, whatever you call it. Does this mar the optimism, or is it a wait and watch approach?
I don't think it is a wait and watch, Niraj. I think it's a buy on dip. The ceasefire has fructified. Yes, you will see flare-ups time and again because of the nature of the deal and the relationship between the two countries. But as long as Iran is able to transport oil through the Strait of Hormuz and Iran is able to supply and sell those oil to their partners, there shouldn't be too much of a problem. I wouldn't read too much into the restart of the Iran-US war. I think these things are part of the course. Yes, you would have ups and downs during the day, and for the moment we can see that there is some flare up. But really, I wouldn't be too much concerned. I think the deal is done, and yes, you will have frequent repercussions about the violations of ceasefire and each party blaming the other side. But as long as the oil is flowing through that strait, we shouldn't be too much of a problem.
Okay, so having said that, then the focus shifts squarely to now, in the near and immediate term, to what comes out of the earnings season, right, Manish? Would that be a fair assessment?
Yeah.
Okay, and if that is the case,
absolutely.
How are you thinking about this quarter one? Because there will be a few winners, maybe a few losers, but could this be very similar to 2020, Manish, wherein when pushed to the wall, India shows its ability to be resilient around margins, even if not around revenue, and will that shine through?
Yeah, so, it was widely anticipated that Q1 earnings is going to get dented because of the spillover effects of the war. And, the war ended towards the fag end of June. And now the focus lies on how Q2 and Q3 would shape up. Having said that, I think Q1 looking at around 8 to 10% growth on the Nifty 50. That's part of the course. Oil and gas is going to be a vulnerable sector out here. Metals is again going to be a vulnerable sector out here. But apart from this, I think things should be pretty fine. You have a lot of tailwind in terms of price realization playing out in the top line growth. There will be implications on margin compression across the board. But valuations have become far more palatable. So, except for IT, which is basically quite headwinded in the overall scheme of things, FY27 should be north of 10 to 12% sort of an earnings growth for Nifty 50. And the first quarter in that context would be around 10% sort of a growth. So, I think market would have to look through and would be broadly looking through the Q1 numbers because of the implications of the war. Focus shifts on Q2 and Q3, but there will be certain sectors which will be quite resilient and certain sectors which will be feeling the pain. So that's how things are stacked up.
Where is it that you foresee pain, Manish, both on quarter one numbers as well as potentially the commentaries? Are there sectors wherein both of these things could mar the sentiment?
Yeah, so if you look at automobiles, the volume growth is going to be very good across PVs, two-wheelers, HCVs, everything. But margins are going to be an issue. Similarly, if you look at consumer names, there is going to be a tailwind in terms of prices that you'll likely see on the top line growth. We have heard commentaries from the staples companies talking about mid-teens sort of value growth on the top line for Q1. But again, margins are going to be an issue because of the crude-related derivatives that plays out on the raw material, bill of materials of the FMCG companies. That is likely to be the case. Top line is quite muted even for the consumer durable space as we step into the first quarter of the result season. And margins, again, are going to be an issue. So these are some of the spaces. If you look about, the treasury gains of banks, that's likely to be somewhat impacted. But, pharmaceuticals, again, a whole lot of supply chain bottlenecks will have implications both on top line and margins. So these are some of the sectors where there's going to be implication on top line and the margins per se.
Okay, where is the reverse, Manish? Where is it that you believe that things could actually turn out to be good, both on the developments that are happening around the sector, as well as potentially the quarterly performance? Is there a space like that?
Yeah. So the whole world knows about these spaces. So these are advanced manufacturing, high-tech manufacturing, aerospace, defense, power transmission, energy transition, anything to do with them.
Okay.
They data center and all of these will be seeing massive tailwinds on the top line, the EBITDA and the bottom line. The only question out here is that what valuations are they palatable? Because this tailwind is not only for this quarter, but the whole of this year and next few years. But what is it discounting? Is it discounting FY28? Is it discounting FY29 or 30? That is the call you have to take.
Okay, let me twist this and ask you, Manish, where is it that Manish Sonthalia is, in the current construct of the market, happy paying top valuation premium to a story which might be justifying FY29, because FY27 and 28 is just way too expensive. And there are plays like that, right? I mean, aerospace and defense, in some aerospace companies, the valuations are probably expensive even at FY29 levels, if you will. So where is it that you are comfortable within this expensive cohort, and why?
So energy transition is here to stay, right? So if
Okay.
you don't find valuation palatable from a large cap perspective or well discovered names perspective, you look into the mid and the small cap names. Same goes with deep tech, right? If advanced manufacturing, semiconductor, these are well discovered plays, the top line growth is going to be there, but valuations are probably discounting FY29 and 30. Look at robotics, deep tech, again the mid and the small cap space. So all these spaces are going to be relevant from an FY30 perspective. Where the valuations have not got fully discovered is the space that you want to be. And there are enough opportunities you have to open and look with your eyes where these spaces are. And a whole lot of these names are available in the mid and the small cap space.
Okay, interesting. Manish, the one, how do I say, the one pickle in the minds of the street versus the minds of the chartists, because yesterday it was uncanny that I got at least three notes from technical experts who are pretty good at the craft, telling me that they see gains in IT ahead. Now I'm trying to understand whether there is a fundamental merit in that argument currently, that there might be gains to be made in IT stocks ahead. And I'm not talking about buying them and hoping that they will do well, because technical chartists are actually seeing on the charts that the stocks will move up. So is there a fundamental case for that to happen?
Look, the sector and the stocks within the space has fallen so much, both on the count of earnings cut as well as valuation cut, that you are really pressing the extremes on this space. I get the point that there is AI disruption and a lot of business models will be thrown out of the window. But nothing moves in a straight line, either on the downside or the upside. In this case, the downside, the fact that it has fallen so much, and this is particularly relevant from the chartist or the technicals point of view, is that there is likely to be some bounce before the next round of selling happens. So, I would agree to the fact that since fundamentally valuations in any case have fully justified, the fundamentals of the sector per se. You have 5% free cash flow yield businesses, large companies, 12P, Infosys has 3 digits. I mean, all these things just look too good to be true. On the other hand, you hear news like Microsoft is also entering AI services implementation, which will be basically a major competitor to Indian IT services companies per se. These are basically long-term problems which Indian IT services companies will have to deal with. So I would believe there could be a 20 to 30% upside from the current levels. You have beaten down the sector just a bit too much. In the short run, there could be a bounce, and maybe the long-term trajectory still will hold that. It will unfold till the business models of Indian IT services companies plays out.
Okay, fair call. Manish, are you a sports fan? Are you watching tennis or football?
Yeah, football is something which is good, but disappointed at some of the major countries are out. Like Germany is out, but still, match is quite exciting. Let's see.
Yeah, did you see Argentina last night?
Yeah, absolutely. I mean, what do I say? What a comeback.
What a comeback. Yes, indeed. I know some people are disappointed, particularly people in my studios. My producer who is producing the show right now is very disappointed that Messi won, because he and I almost had a bet that Messi will not. And I'm so happy that I won per se. But yeah, Manish, enjoy the rest of the Football World Cup as well as Wimbledon. And let's hope that Djokovic, viewers, does something special.
Yes.
Manish, thank you for joining in today, of course. But viewers,
Thanks for having me, Niraj.
no, the pleasure is ours. But this is the charm of the sport, that the OGs, the ones who've done this for years and years, are still doing it. Djokovic and Messi right